All right, good morning, everyone. Hey, it's a great Wednesday morning. It's April 1st, April Fool's Day. We were talking this morning. I don't think there's any April Fool jokes going on in our house this morning. So, welcome to our weekly leadership call. We are recording this. My request is if you're not speaking, please mute your phone or mute yourself so there's no feedback. But we've got a lot to cover today. Kind of excited. There's been some good changes in the last 24 hours in our world. I have two guest speakers today. Eric Dole, Senior Vice President with American Business Bank. And Eric's going to share with us the current SBA programs and from a cash flow perspective, some options that we have to get through the next couple of months here. And then Matt Hanson, President of Alera Group, also another good friend of mine. And Matt's going to be sharing with us how we navigate the employee benefit side and the tax credits from an employer side of the current program. So with that, again, today this is what we're talking about: the bills and the stimulus packages, how to navigate the current landscape, SBA loans, emergency paid leave and family leave act, and the payroll credits. And with that, I'm going to hand this over to Eric, and Eric can present. There you go, Eric.
Well, thanks, Dan. Good morning, everybody. Glad to be here. Thankful for Dan for including me, and hopefully, by the end of this, you'll have a few really good nuggets to take away and some good action items that can be useful to you and your business. As we all are aware, there's a significant amount of information floating around out there. There's a lot of misinformation, a lot of things that are confusing, conflicting. And so hopefully, as we go through these couple programs this morning, you'll be able to have a clearer picture of how these options might fit well into your business, and be able to take some steps to better yourself here, after we're done. So the first couple of things I want to get into this morning, is going to be kind of differentiating the two current programs that are available. There's a lot of confusion over what the Economic Injury Disaster Loan Program is, what the Paycheck Protection Program is, what they're used for, and how they're different. The EIDL program is what it's known as, which is the Economic Injury Disaster Loan Program, is the first program, and this program has been out for the last 3 weeks. And typically what this program is that this is actually used for natural disasters normally. So things like tornadoes or hurricanes or whatnot. As soon as really this became an economic issue and a natural disaster, the government flipped this program on and started receiving applications. So,
good morning. It's Joy from TireCore.
So with the EIDL loan program, the good news is that this is a program that is specifically geared towards working capital, specifically for supporting a business during a difficult, economic time like we're going through right now. And the good news is that you can immediately go on after we're done with this, presentation to sba.gov/disaster, and you can actually apply for this loan today. The good news is that for the first few weeks of this program, it was a very difficult process to be able to apply for. Luckily, this past weekend, as of Sunday evening, the SBA actually removed most of the forms, most of all of the qualifications for the most part, and they streamlined it really down to only a few different pages to have to fill out, and very simple information that you need to gather and submit. So, you know, I would encourage anybody who is on this call who is, you know, receiving some kind of, you know, economic, you know, issue with their business to, you know, talk with Dan, talk with your other advisors, and then get into the queue for the economic injury disaster loan. Dan, I can't seem to click on that. Can you just switch to the next slide for me, please? Perfect. So, you know, now that we've talked a little bit about it, here's some general parameters about the program. So like I said, you can get online at sba.gov/disaster, and you can actually apply for this. It's a really simple process. The good news about this program is that for all intents and purposes, this is a very, very low interest rate loan. You can receive assistance up to $2 million. There is no fee, no cost, no personal guarantee associated with this. So when you would compare this to a standard bank loan or a normal SBA loan that they would typically do, all of those things have been removed. The other benefit of this program is that this permanent working capital can be financed over a term of up to 30 years, which a typical SBA loan, you're looking at a max of 10 years. So this is a very, very generous program for permanent working capital. The other really great benefit about this is that there's no prepayment penalty on this loan whatsoever. So that means that, you know, as we move through this economic, you know, issue, very quickly, you know, you can choose to pay this loan off as things start to recover, which is a huge, huge benefit. And the other thing about this is that a portion of this loan can be refinanced into the second program that we're talking about, which is the Paycheck Protection Program. So the two programs currently out, the EIDL program, the Economic Injury Disaster Loan Program, and the PPP program, or the Paycheck Protection Program, are complementary to each other. So there was a lot of misinformation about, oh, you can't apply for one if you already have applied for the other. The reality of that is that they're for two different reasons. The EIDL program is specifically for working capital. So this is something that for operating expenses, things that have been impacted, you know, that you need to still be able to pay for operating your business, even though you've had a loss of revenue. That is what the EIDL program is for. And the good news is what we're seeing currently, as of yesterday evening, I was on the call, I was on an update with the SBA. What they're seeing is they're typically seeing about a 30 to 45 day turnaround for funding on these loans. And so the other good part about the EIDL program is that there's actually a $10,000 grant that they are giving as part of this. And we've already had some customers who have received approval for that grant, which is completely forgivable. That is just basically an injection of capital immediately while you wait for your assistance to come through. The reality is that not everybody will get that grant, and there's not a lot of specification from the SBA on how they're qualifying those grants. But you know, when you're reading through and you're going through the application process, just kind of note that as you're going through. So, you know, that's kind of in a nutshell the Economic Injury Disaster Program. So again, as in a summary, this is currently available. It can be very beneficial for your business. There's really no downside to really putting your, you know, hat in the ring or getting in line, because the other benefit of this is that if you apply for it and it comes and it is approved, but you realize that you don't need it, there's no recourse. You do not have to take it. So the benefit of getting in line and, you know, putting your hat in the ring for this is really a great opportunity, but there's no issue if you don't need it. So Dan, if you move to the next one for me. So, you know, moving forward with, as of Friday afternoon, the government approved, obviously, what we've been hearing a lot about, the CARES Act. And under the CARES Act, there's a provision, which is the Paycheck Protection Program. which is basically a program to support payroll and, for all intents and purposes, keep as many people employed as possible during this window that many businesses are being impacted. So as of Friday afternoon, this was approved. Over the course of the weekend and over the course of the last 2 days, the SBA has been working hard to get as much information to banks, because banks will be the supply chain, whereas the Economic Injury Disaster Loan Program is direct through the website. This program will actually be through your existing bank. And so, this is an important part of, getting into conversations with your advisor and with your banker and getting information prepared, because currently, as of this morning, yesterday afternoon, the SBA uploaded a copy or a sample of an SBA application for this program. Now, it's important to note that the SBA is not receiving applications directly as of yet. The guidance so far is actually that starting as of Friday, April 3rd, the SBA will be receiving applications. Now, what that means is that it doesn't necessarily mean that you can't be prepared and you can't already have your application worked out. And so that's probably a really important thing that you should be reviewing and talking, and that is something you can actually look at and get on the website going forward. So a couple key points about the Paycheck Protection Program. This is based on your historical payroll. So you're looking at basically your trailing 12-month average payroll, which is what's deemed as fully loaded, which includes salaries, benefits, several different key elements, not just salaries, which are important. So what I would encourage you to do is that to connect with your advisors, connect with Dan, get this information prepared and create a calculation to understand. Dan and I have spent some time together. He understands, this program very well, and can provide and help you with guidance on some of the clarifications on what to calculate in that monthly payroll average. Once you have that monthly payroll average, the good news is that they're actually providing a multiplier on top of that average. So for round numbers and an easy number to remember, if you say have an average monthly payroll that you figure out that that is $100,000, the government is actually providing 2.5 times that amount for this program, which would mean that you would have a loan amount of $250,000, which is great. And what that is going to be used for is that you need to use that money to keep your employees employed in your business. The most important part, and probably the most hyped and discussed part of this program, is the fact that there is a forgiveness component to this. So it looks a lot like a government grant. So once you've figured out that number, once you've applied for your loan through your existing bank, and you've been approved, there will be an 8-week test period whereby which you will just basically need to prove to the government and to your lender that you've been able to keep those people employed and be able to prove that you've maintained that level of employment over that period. You can also use, some of this money for other things like rent, mortgage, utilities, those kind of things. But you need to use the primary portion of it, the majority of this, at least 75% of it, to go towards keeping people employed. So this program is something that is going to most likely start here within the next couple days. There is a time frame whereby which it stops. As of right now, the bill is written through June 30th. So what I would say from a best practice for this specific program is Start to gather your information specific to your payroll. Start to build a spreadsheet and start walking through that process of gathering that. Start filling out your application and make sure, first and foremost, that all of your information is up to date. Because at this point, this is looking like it's going to be a 7A product, which is a typical standard SBA loan. And different banks are going to have different criteria for what they're going to want to see for this program. It could be as little as just justifying your payroll. It could be as much as making sure that we have updated tax returns and financial statements and all those things. So it'd be really important to get with Dan and your other advisors to make sure that you're prepared as best as you can. So that covers those two programs. Dan, if you wouldn't mind going to the next one for me. So here are just some general best practices that I would say, cover the spectrum for any business right now. This is what I've been doing with most of my clients, and it's really just a good way when you're in an economic issue like we're in right now. It gives some kind of solace and gives some kind of comfort when you have these things already done and prepared. So the first one I would say is that as you're getting prepared and as you're looking at the EIDL program and the Paycheck Protection Program, what you really need to make sure that you understand is your liquidity position. So, get with your internal finance person, get with Dan, work with them to prepare a projected cash flow. In this cash flow, you should really have a good idea of what your current liquidity situation is right now, and assuming that if no cash came in, going forward for the foreseeable future, what's your general runway? What does that look like? Preparing that and having that is a huge benefit to you and your business, and will help you sleep better at night. The second thing is have a conversation with your banker. Understand his or her position in your bank. Understand if that person is a decision maker, what impacts they can have to help you with your business. Make sure that they understand these programs and that they know how they can be impactful to you and how they can help you, and have those active conversations sooner rather than later. The next would be talk to your customers, talk to your vendors. We're all in this together. The reality is that if you understand your cash position, going back to number one, you'll have a good idea of what you can work out with your customers. So understand with them that they're in the same position that you are. So as opposed to just, not paying them or hiding or doing whatever, have an open conversation, discussion with them, and let them know, hey, listen, I'm in a difficult time. You're in a difficult time. I may not be able to pay you all that I owe you, but here is what, based on the cash flow that I put together, that I can do that can help you and also help me. And lastly, as you're getting in and getting prepared, this kind of goes back to my last point on the last slide, is just get prepared. Make sure that your tax returns are up to date. Make sure that your financials are up to date. Make sure that you understand your personal financials. Have all of that in a folder ready to go so that you're prepared and you're ahead of what most people would be at this point. And I think that if you follow those kind of 4 general best practices, you'll be a lot farther along than most people.
Awesome. Thank you, Eric. And I'm just going to reiterate, if you're on the phone, if you're not speaking, please mute yourself. We're getting some feedback. Thank you. And then does anybody have questions for Eric? I know there was a lot of information here, Eric. I greatly appreciate it, but I gotta imagine there's some questions.
Absolutely.
Hey, Dan, I've got a question.
Yeah.
Eric, thanks so much for that. That was really informative. I was wondering, do you know how they're determining the amount for the EIDL loans? What is the criteria for for how much of a loan they're giving you?
Yeah, so when the program started, it was very vague overall. But as of Sunday, they've kind of streamlined that process, and the directive that the SBA is providing at this point is that it will be based on 6 months of operating expenses, what they're shooting for, with a cap of $2 million. So, that is what they're specifying to us. And that is what we understand at this point.
And that's collateralized by something? Is that like how they're weighing it? How much collateral you have versus that 6 months?
So there is a stipulation in there for a loan over 500,000. Anything under 500,000 requires no personal guarantee and no collateral. Anything over 500,000, as far as we understand today, anything over 500,000, they are considering collateral as a possibility, but not necessarily, not necessarily required. So it just depends on each individual application and each individual situation. But the summary is that for the most part, for most of these loans, there will be no personal guarantee and no collateral associated with them, which is completely separate and different than what a normal SBA loan would be. So it's pretty beneficial.
Thank you.
I think so.
All right. Any other questions?
One more question. I noticed that you have the 7A 6 months of payment deferment. Would you advise them potentially refinancing your assets with that program to get that 6 months of deferment if you weigh that against the PPP?
So let me make sure I understand your question. Are you asking for an existing debt? Are you asking to refinance an existing debt with this program?
Refinancing an existing debt with the 7A, given that they, for the next 6 months, are gonna, basically pay your payment for you.
Yeah, so let me go on a couple things. So in the new Paycheck Protection Program, if you already have an existing 7A loan with the SBA, there already is a deferment whereby which, if you have an existing 7A loan, the government will actually pay your principal and interest payments for the next 6 months. So in regards to existing outside debt payments, from my understanding and the directive that I've received from the SBA is that this program is not set up to be able to refinance existing debt as of right now. So, in that case, that would be a conversation with your existing lender to figure out a situation or, a benefit, possibly a deferment, depending on the situation, whatever that bank would be willing to discuss.
Got it. Thank you.
Someone put a message in the chat box. What is the 12-month period of payroll information? Is it from March 2020 back, or 2019 payroll, or something else? My understanding, as of the information I was looking at last night, is that the 12-month payroll look back period is going to be from April 1st, 2019 through March 31st, 2020. Eric, is that what your understanding as well?
That's what my understanding is as well.
All right. Any other calls before we hand it off here to Matt?
No.
All right.
12 months.
Very good. Well, thank you for the opportunity, Dan. And Eric, thanks so much. I am so grateful for the most recent piece of giant legislation, because it took the pressure off of our world in the employee benefits space and put it on you. So you've got 2 weeks, if not 2 months, of sleepless nights and tons of work to process some tens of thousands of loans. So congratulations on that. I'm going to talk a little bit about the first big piece of legislation and how it impacts employers, and really just focus on the primary questions that we received. And then I'll stop at the end, take any questions. If you see anything in the presentation along the way that you want or is valuable to you, just ask myself or Dan, and we'll get it to you. I love the quote that's going around that's been attributed to Mr. Rogers' mom. It's her advice to him when he's seeing something scary in the news. She says, look for the helpers. There's always helpers. And Eric, certainly you are a help. And Dan, you've been an extraordinary kind of leader and helper, and just helping all of us sort out what is a really significant event going on in our world, something unprecedented. But if we look back, there are lots of unprecedented things that have happened in history, and we all made it to here, and we'll make it on the other side. So thanks for being a helper and letting me be part of it, Dan. The big piece is the Emergency Paid Leave Act and Emergency FMLA, and it basically gave FMLA to all employers over two, and not only to all their employees, and it paid for it on your behalf. So we can jump to the next slide. I'll see if I can do it. Oh, there we go. The provisions of this is for smaller employers that might not have been familiar with FMLA. There's two provisions to this law. One is the emergency sick pay, because the emergency FMLA starts 10 days after April 1st. So today is April 1st. This law becomes effective for you and your employees today. And it has a provision for emergency sick pay. Emergency sick pay applies to any of your employees that have been diagnosed with the COVID virus, are having to care for a child who's been diagnosed, or dependent has been diagnosed with the COVID virus, or are caring for a child who has to stay home because of that diagnosis. And there's different amounts of money for this 10 days. But the first 10 days, if it's actually the employee, they're going to get $511 a day. If they're having to take care of a child, were and was really at ground zero in Washington, basically will tell us this about the COVID virus. Part of which we know is that if you don't already know somebody who has the virus, in the next 2 weeks you will. And that's simply because of the amount of testing that's coming out. Abbott Labs just had their test approved. They think they can put 50,000 tests a day into the system. And that's a good thing. That's a test that will give you a result in 13 minutes. Secondarily, you have the Gates Foundation, United Healthcare, Quest Diagnostics, and the University of Washington have improved the first test that has a 3 to 5 day turnaround, but they now have that working towards approval to be self-administered. Right now, it has to be administered in a doctor's office, and it's much less invasive than the original test, which basically shoves the Q-tip down your throat via your nose. And so those are really positive developments. We'll see lots of tests, and there'll be lots more folks that this will apply to. So carrying on, that's emergency sick leave that then rolls into FMLA. Go ahead and go to the next slide, the FMLA. And these are all focused on employers less than 500 employees. Go ahead, Dan.
Yeah, I just want to reiterate, can everybody please mute their phones or mute their microphones on their computers? We're still getting a lot of feedback from someone. Thank you.
Yeah, great. So the Emergency or Family Medical Leave Act, which again applies to all employers under 50 employees, will actually provide 12 weeks. If you have to stay home, as many people do because their children were at school and now the school is closed, they qualify for the Emergency Family Medical Leave Act. We have an infographic and an affidavit that might be valuable to you on the next slide that kind of outline this for you. So the first question, and maybe is that employers often ask, this triggers a series of questions. This is around FMLA and then around just business in general. And so in a moment, I'll talk about how you get reimbursed for these dollars, because this is a program that the government mandated, put on all employers, but also made it very easy for you to get dollars back. Some of the common questions that we get from employers are more general around business survival, like, hey, if we want to reduce the hours of our employees, can we keep them on benefits? If we furlough our employees, Can we keep them on benefits? And how does that interact with our insurance contracts that say they have to be full-time, 32 hours plus workers? And I want you to know that generally the answer is yes. It is 100% yes on your medical plan. If you are self-insured, you definitely need to get clearance from your stop loss carrier. But all the major insurance carriers in the fully insured marketplace have basically said, if you're willing, you as the employer are willing to continue to pay the same portion of the subsidy that you paid when they were an employee, you can continue them under furlough during this emergency time period. That includes reduced hours. You also have the ability, if you do want to terminate somebody and subsidize their COBRA, you can do that as well. Those are some of the most common questions. You do have to be more careful with disability and life insurance contracts. Those carriers have been slower to grant that same privilege, but they are moving in that same direction. That you want to make sure in your carrier's case that's true. This infographic on the right is just a simple outline of the questions that somebody needs to answer to know whether they qualify for the emergency sick leave or the FMLA. And then a best practice as an employer, because you're going to be receiving reimbursement for this, is for you just to have a simple record. You are not being asked to police this at all. In fact, the government has asked you to be as open and easygoing as possible on this. Don't send people to doctors for doctors' notes that they qualify. And so the best practice is just having an affidavit like the one here. They check the box. They say, hey, we say we qualify. We say we're telling the truth. Here's our signature, and therefore you've got this. And it helps keep a record, which you're going to need for reimbursement. Going to the next slide, talks a little bit about reimbursement. And reimbursement is simple. It qualifies whether you are a for-profit or a not-for-profit organization, because you are going to take the credit against payroll tax credits. You can actually, there was some concern about, does that mean I'm going to have to wait till the quarterly tax filing of my 941 and get the credit at that time? The government came out and said very clearly, you can take it as a credit today. So as an example, if you have $8,000 of folks starting today that are on family medical leave that you've paid out, and then you have a payroll tax due, you can take that $8,000 as a credit against the, let's example, $10,000 of payroll tax immediately, and then true it up at the end of the quarter. It will be trued up at the end of the quarter. As you can imagine, any of this legislation, whether it's the legislation that pumps tons of money through our banks, through the SBA, or in trying to protect employees that are suddenly having to stay at home and not able to work because of their kids. These are giant pieces of legislation with huge amounts of money done in a very short period of time. They are that creates potential for abuse, but it's intended really to create a stability for both our businesses and our employees through this difficult time. With that, I'm going to pause and see if there's any specific questions that I can be of help with.
Yeah, Matt, there was one question in the chat box. I believe Celeste asked if there was somewhere we can get the infographics, and I believe you had that.
If my information is available, they can text it to me. I can send it to you, and you can forward it. Yeah, absolutely.
Let's just do this. Can you? Is it on your website? There is on your website a toolbox, right?
Yeah. So, and if they want to just email me at matt.hanson, Hanson, at aleragroup.com, or you're right, Dan, in my signature line is that link out to a tremendous number of resources, including additional infographics. Happy to share anything, either directly with them or through you, whatever is best.
Okay, I just put in the chat box Matt's email address. And then also, if you go to his website, aleragroup.com, there is a COVID resource hub in there. What else? Did that, Matt, that got through everything that you had, right? I was trying to answer questions as well.
Yeah, no, exactly. Whatever, I try to hit the top questions that people have been asking us, and however else we can be helpful.
Yeah. So, last week and the week before, I kind of threw this out. Hey, we're all business leaders. We're all leading teams here. What are some problems people are having that they think maybe someone else has been through? Does anybody have anything of value to offer to help? Just kind of a roundtable. If anybody has anything they want to share or has any questions.
Hey, Dan, good morning. This is Carlos Mangello with Inland Engineering. I had a question in regards to the payroll tax. How would the government or the state tax board or whoever's going to give the credit know that we have furloughed somebody or need to take that credit from the payroll?
Yeah, Matt, do you have any clarity on that at this point?
Yeah, so the reporting processes are still being developed. There's a sense that there's a lot of trust extended into the system. So it starts today. So let's say many of us have had employees that have already had to stay at home and not able to work because they're caring for their children. So that's part of the criteria, right? They're caring for their children because their school's shut down and they're not able to work. Many of them are able to work. This would be somebody who's not able to work that qualifies. And so you know that they are no longer being paid, and so that at $200 a day is going to be the rate that they're on this FMLA for you. So as long as they're not working for you, you know they've qualified. Ideally, you have the signed affidavit. You can just take the number of days until they return to work and take that as a credit. And you can take that as a credit on a weekly or a monthly, or you can wait till the quarterly basis. So at this time, the tracking is solely on the employer.
Got it. Thank you. How about the health? Because some of them would probably end up going on COBRA or some type of subsidized or government insurance. Would we get credit for that as well?
Yeah. So you're saying if the employee is terminated and goes on COBRA, if the employee is terminated, they're no longer your employee, and so they're no longer eligible for FMLA. So an employee that hasn't been terminated but is not able to work because of the criteria that either they have COVID, a dependent has COVID that they care for, or a dependent that is in the school system and the school system has closed down because of COVID. So they're still technically your employee. You're not paying them because they're not working and they're not able to work because of that situation. That's what qualifies them. If they've been terminated, they're no longer your employee. They're eligible for COBRA and any of those provisions, but that takes them out of FMLA.
Gotcha. So if we do furlough them because of one of the criterias, we would still have to cover their health insurance until they come back, correct?
Typically the distinction, and none of these terms are defined by ERISA, they're just kind of common business practice terms, but the idea of a furlough is it's somebody you intend to bring back at some point in the future. And so generally speaking, employers have continued to pay their benefits. One of the questions that often comes up in a furlough is, do I have to pay out sick pay or vacation? And the answer is no, you don't have to. Many employers intend to help the person with their income, but if from a cash flow standpoint, you can't, you don't have to. The person still has to have their vacation approved or be sick to qualify, if that's how you want to approach it. But so that's a furlough, separate and distinct from a layoff or a termination.
Right, and thank you. That's very informative. I guess where I was leading to was, if we do furlough them, and I know we get to take the credit for the payroll side, would we be able to take the credit for what we're paying into their insurance as well, or is that something that we work out with the employee?
Yeah, there's no credit currently that offsets the cost of insurance. So we know that the insurance carriers will let you continue the insurance for the employee as long as you subsidize it at the same level you did before. And so that means, if you paid 80% and the employee paid 20, they still would be responsible for their 20. You have to figure out a mechanism of how you collect that 20 from them. You could collect it as a pay-as-you-go. You could defer it for a number of months, but it still would need to be paid at some level. I'm kind of talking around the edges of your question, but am I answering the specific question you have along the way?
You have, and yeah, it's very informative, and I like the feedback. Thank you.
So I want to just add in there, Carlos, the under the Paycheck Protection Program, one of the things that you can have funding for is the employee benefits. So and again, this is new for all of us, right? My speculation is that if you're receiving funds under the PPP program and that employee has been furloughed, that you may have access to cash through that program. I see Eric thinking.
Got it. Thank you.
That makes sense, because I think the main motivation of that program is to get people to come back to work and to replace wages is a big part of it.
Yeah, I mean, I'll chime in a little bit. The way that I understand it, and I'm a little vague on kind of the clarification, but what I understand is that if you have an employee furloughed, the primary driver behind the PPP program is so that furloughed employee can come back into your business, because the primary driver from the government for this program is that, for all intents and purposes, rather than having someone go on in unemployment, they would rather have people employed in a business and being able to pay for that, through this grant to keep those people in your business. Because the reality is what they learned from the last downturn is that one of the primary reasons why we had such a long recovery was the fact that they couldn't get people back into businesses. So the primary, source and the primary reason is that, for all intents and purposes, this is an unemployment benefit or grant to keep people employed in the business. So if you have a furloughed employee that's sitting on the sidelines, they want to pay you to bring that person back. And even if they have to sit in your business kind of idle for the time being, it's better to have them there than outside of the business. That's the way that I understand it.
Mm-hmm.
Got it. Thank you.
Could I just ask a quick question on behalf of my daughter who works for a veterinary clinic, and her hours have been cut? They said to her yesterday that because her hours have been cut, that she'll no longer be able to get her medical insurance.
Yeah, so two things there. One is obviously a reduction of hours probably does qualify her for some element of unemployment. That wasn't your question. The question was around her medical insurance. And so that really is a choice of the employer. Historically, the health plans do have provisions that say you have to be a full-time employee. The question that has come up across the country is, okay, I have a situation where I want to allow my employees to stay on their health insurance. We're in a healthcare crisis. Can I do that even though the contractual provisions say it has to be a full-time employee? And all medical insurance carriers in the fully insured market, which is 90% of employers under 100 employees, which is most likely this veterinarian, but even almost universally, plans have said, yes, you can keep your employee on during this emergency healthcare crisis. When the emergency is over, then we'll go back to those provisions, or you have to change the contract. But it's very the insurance companies are being very generous with that definition. It's up to the employer.
So she does work for a large corporation, over 6,000 employees, but her particular, you know, and I'm sure they're all being affected across the USA, but
Yeah.
does that really matter?
Yeah, it matters in the sense of being a large employer, potentially self-insured, and they have, and either way still has the flexibility to define the policy for themselves. And so they define, they're adhering to their pre-emergency health crisis policy, which is well within their rights and privileges. It's really the exception that people have asked for, and the exception has been granted where people have asked for it. It doesn't sound like they want the exception.
Yeah, wow. And then she could also apply for unemployment insurance for the difference in hours?
She has a reduction. Yeah, she has a reduction in hours. I mean, that's kind of outside the scope of my expertise, but I've heard that question asked many times, and there's some eligibility there. It depends on her state, of course, but California for sure.
Yeah, California. Thank you very much, Matt.
You're most welcome.
Right. Any other questions? All right. Looks like we don't have any questions or any further questions. I think at this point we'll wrap it up. I've recorded this and I will send out a link to the recording so everyone has this. Again, I want to thank Eric and Matt both for being on this call. You were a great amount of help to all of our clients and everybody here. I just want everyone to just think through that we're all going to get through this. Tough times, but we have resources. We all have resources. Please share information. Please ask for help, and we will get through this. So we will be sharing this link. I'll be sharing some more information, hopefully today, if not tomorrow, on the PPP program and what you need to do. And please get those applications in. Start talking to your banker. If you have questions, let me know. If you need help, let me know or let my team know, and we can go from there. Again, thank you to everyone, and I'm going to go ahead and sign off. Have a great day.
Thank you.
Yep.
Thank you, Dan.
Thank you, guys.
Thank you.
Thank you, everyone.
Yeah, Stan.
Thank you all.
Yeah, it was great. Appreciate it.